If yesterday's testimony of the Fed chair in the Senate had a taste of partisanship, today's House appearance should be full-flavored. The big issues, the impacts of tax cuts on the economy, deficits, and the trade controversies. Yesterday, Powell was able to, in his own words, quote, stay in his lane and avoid strong commentary on the big political issues. On trade, Powell said that the Fed had heard some businesses were canceling or delaying capital spending due to tariffs. And then he had this generic trade comment.
In general, countries that have remained open to trade, that haven't erected barriers, including tariffs, have grown faster. They've had higher incomes, higher productivity, and countries that have, gone in a more protectionist direction have done worse. I think that's the empirical result.
That was about it. Unclear if he'll be able to avoid getting more dragged into the politics today at the more divided House. On rates, the overall commentary from Powell's day one testimony is that the Fed remains on track for 2 more rate hikes this year. Here are the probabilities. 89% in the markets now, the Fed funds futures markets for September. That would be to 2.25. 60% for December, raising it by another quarter point to 2.25, 2.5. And then we don't get that next rate hike to the 2.5, 2.75 level until June. Now, the market may be a bit behind the Fed in its forecast for next year, but that's where Powell says there's more uncertainty. Coming full circle, uncertainty in terms of the economic effects of tax cuts, and uncertainty, guys, in terms of how all these trade disputes play out and what effect they have on the economy. Carl?
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.